because it's 11. I'm Laura Catton. Welcome to Roundtable Live. Roger's figuring out his camera situation.
Already did.
Oh, Dunzo. There you go. So today joining us, of course, is Roger. This is our Wealth Press Roundtable. I'm with the editorial team. Doing the technical stuff is Francisco Bermea. There he is.
Hey, everyone.
Coming to us live from Texas. Our guest today is Garrett Baldwin, and Garrett's an economist. He's our in-house economist.
Hey, Garrett, how are you?
Good. How are you today?
Good. I'm just seeing everybody else now. Hey, Laura. Hey, Francisco. Hey, Jeff.
Hi.
How are you guys?
And Jeff Zananiri. There he is. The third of our panel today. Thank you guys for coming on today. So shall we get rolling? Most of the big earning announcements, at least in tech, were last week, but there's still stuff going on this week. Are there any that you're keeping an eye on this week in particular? Jeff, do you want to go first? Anything you think will have earnings? Any earnings this week that you're interested in?
I'm like 2 hours away from the Fed.
We're getting to that. We're getting to that.
I don't know. Does it matter? Does it matter when we have what's going to happen? I mean, we've had. How do I say this? Yeah, I'm just focused. I'm just focused on the next 2 hours. Listen,
No,
AMD guided lower. They guided lower a few weeks ago, and comparatively speaking, Roger likes to look at the body of work of how the earnings actually are, not graded on a curve. They were not good, but the stock is rallying. So I would say that to be a fundamental trader right now is probably the wrong way to do it in general.
How about you, Garrett?
Tomorrow's a kind of like a Cathie Wood day for me. So we've got companies like Datadog, Cloudflare, Coinbase, these companies that are trading at 10 times sales or more, in some cases 20, 30 times sales. I won't get into it. I'll just explain to you. That's really, really bad, really expensive. And there's about $20 billion at least in market cap on some of these companies, and they're not profitable. So these are kind of zombie stocks that are held heavily by ETFs, companies like Vanguard. I'm just wondering why the hell the companies are still holding them. What will the reaction be? And I remind people, you go through Cathie Wood's list of her stocks. There's 7 of her top 10 where there has been no executive buying in the last year, and roughly a 9-to-1 sell to buy ratio in terms of the companies that she owns, which begs the question, if the executives aren't buying the stocks, why is she? And more importantly, why would you?
Yeah, that's always an alarm bell for you, isn't it?
Mm-hmm.
A good one. What do you think about it?
I'm always here for Cathie bashing. I'm not a misogynist. She's just a terrible trader. I think those companies, if they didn't exist within the realm of her universe, would all have like an instant PE appreciation. Just my 2 cents.
And Roger, what's your opinion? Are there any earnings you are interested in this week, or?
Yeah, I am actually. I actually am. Generally speaking, we got ADT today, we got Amgen today, we got Carvana today, Cigna, ConocoPhillips today, Crocs is coming out today, Dropbox, Expedia, Kellogg. So we're still Marriott. We're still in quite a full. We're getting kind of broader, if you will, and getting a little smaller in terms of the companies we're looking at. I think there's still a lot of price discovery left. I don't believe that the earnings are completely baked into the market just yet. I think they are for FANG stocks and some other stocks, but I think there's still a lot more price discovery to go. And I don't think Twilio, Starbucks, Wayfair, and as Garrett mentioned, we got a lot of smaller ones, but we also have Disney tomorrow, DraftKings. So we still have, I would say this is the last week before we get a really good picture. The next 2 days are going to be very important. But obviously, as Jeff mentioned, the big fundamental shift is going to be where the Fed takes us. More importantly, what they say and how many times they say what was the word they used last time?
Pain.
No, pain. Yeah, I mean,
pain.
They're just, yeah, and I think that's really. I think that's going to be the big story this week. I think that's going to override the earnings that we have seen so far. I would be surprised if not. And I think the biggest thing that investors are going to be looking at is what the language and what tone they're going to take towards December.
Yeah, I think about that too. So you think it's going to be the 0.75 point
I think today, I think that anybody who does not think that they're going to do 3/4 of a point today is just not in living in the realm of reality.
Hmm.
I mean, I think it's pretty baked into the market. I think it would be a shock one way or the other. I think as of this morning, the odds that were priced in the bond market was like 92%.
Hmm.
I mean, I think it's a foregone conclusion at this time. Please, I mean, guys, please chip in and tell me if you guys think otherwise. But I think we're going to go 0.75. I think they made it very clear, and they haven't deviated from their path of destruction, at least not yet.
What do you think, Garrett? Do you agree? You think that's what's going to happen?
It's
3/4
75.
points?
It's 75 all the way, and it's probably 75 in December. I don't really understand why people continue to make these arguments over and over again. What really matters at the end of the day is the fact that the CPI is at 8.2%. It's probably going to be hot again next week. These job reports probably going to be good. The ADP was higher than expected. The real interest rate in this economy is negative 5.2%. Next week, if we raise rates, we're still at negative 4.5%. I want to remind everybody, if you look at what happened in Europe for the last decade, they didn't have any inflation. So what did they do? They cut interest rates into the negative territory. That created a real negative interest rate, which is designed, by the way, to get people to spend. So in this environment, when you have negative interest rates, people consume. They buy because they know that the value of their dollar is going to be worth less in the future. Now, ultimately, that works until it breaks. We have a little bit of a credit bubble build. Spending rates continue to decline. But the reality is, Summer said it very, very well. We've never brought inflation down, the CPI down. It takes 2 years to get back to 6% on the average. And in addition to that, we've never brought inflation down to the target rate without getting that Fed funds rate above the CPI level.
How about you, Jeff?
Listen,
Anything to add there?
The Fed doesn't want the stock market to go higher. I've never seen a Fed that literally thinks that they're the Wizard of Oz, that wants to manipulate markets. I'm a free market capitalist, so it pisses me off. It pissed me off in the other direction too, when they were the plunge protection team and they were supporting higher asset prices the entire time. They meddle way beyond what they're supposed to do. You cannot control these things. It always ends bad. It never works out, to go along with what Garrett was saying. They can't control inflation at this point. All they can do at this point is add to the misery and create other problems that we otherwise would not necessarily have as bad as we do right now. So I'm really interested to see how, so we've had a pattern of this. Fed raises 75 basis points. The market rallies. So the market sells off into the Fed. They do the move. The move happens. There's a little bit of a gap, and I'm talking in minutes. I'm not talking about days here. There's a little bit of gap of time between the 2 o'clock and then the press conference. Think about half an hour. 2:30, the chief crony, the criminal in charge, goes out there. He starts getting softball questions by a bunch of mainstream media muppets, and then he just says what he wants to say, and he's crushed the markets while speaking the last 4 times in a row. The big difference last time was he went so hard that crushing of the market went on for 2.5 weeks. It wasn't a matter of hours. It wasn't a matter of days. So I think the rally that we've had in the market is incredibly precarious. I think it was built on this assumption, like Garrett said, that maybe they'll be at 50 basis points next time. Maybe this is actually working what they're doing. I don't think any of that is the case. And I'd be a little bit nervous on the long side. I think the Fed looks at this little bit of a rally that we've had, especially in the junk stocks, the Kathy stocks that Garrett was talking about, as more collateral for the damage that they want to inflict.
So the market was already down a bit this morning. You think it's just going to continue after the announcement? And it could continue for days and more this time around?
Who is the question directed at?
Well, I was sticking with Jeff right there, but anybody can chime in.
I'll answer that. I think that you might get a knee jerk. You might get a knee jerk pop when they do 75. Then he's going to start. So beware of that. That might be a place to lighten up your inventory. And I think once he starts talking, I think he's going to talk down the market. Yes, I do. Do I think it's going to go for 2.5 weeks like last time? Probably not. It depends what he says. If he says that we've seen no efficacy in our program, which is reality, I don't expect him to be truthful about that. If he says that, then you get a pain train for a while. If he just says, well, we're starting to see that some of this stuff's working, but our work is nowhere close to done, that would mean that they're going to continue on a very hawkish path, but they're thinking that their work is working and they might end it at some point. So there's different situations that I'm looking for with what he says, different things. If you get a 3 to 5% sell off on the S&P, I think you could bottom pick it for a trade. I do. But I wouldn't be sitting like with all of my cash long into this thing. That's crazy.
So 2:30, I want you to look at the clock. 2:35 today. Between 2:35 and 2:37, the market will likely pick a direction. That is what has happened virtually every time this year. And I will trade that until about 3:15, whatever direction it is moving. And then at 3:15, we'll see what happens that last hour when institutions come in and if they use any pop as an opportunity to sell. As far as the kind of forecast goes, look, this all feels very familiar to me. This feels very similar to 2008, feels even more similar to 2018 when the Fed was tightening, cutting its balance sheet, raising rates. You had this chop that was transpiring between roughly 260 and 285 at the time. It happened for about 2.5 months, and then the S&P 500 finally just gave out in late 2018, falling 20%. That's what I anticipate is going to happen, because I want to remind people 75 points today. Goldman Sachs says we still have another 125 to go after this, and I'm still convinced we might have to go even higher than that. So we just had the strongest monthly rally on the back of the strongest insider buying that we have seen since January of 2022. You had about I don't even know what we're 12% move. You know, people are not foolish. They recognize that in the kind of those low volume rallies, you move toward those overbought conditions, they're going to dump. And it's just a matter of what day they decide to do it. We had that happen back on April 6th. That was the largest ETF outflows in 4 years. June 8th was the largest selling in hedge funds in 15 years. We just had the largest retail drop in roughly 7 years. So I don't see this bottom being 3,500. I think we're going to head back there. It's just a matter of timing it and knowing when to get out. That's what we kind of have focused on at Haven Investment Letter for the better part of the last 6 months.
And Roger, what do you have to add?
I completely agree. I completely agree. And as I started saying, when I first started talking, I said the big thing today is not going to be what's happening today. I think that's really priced in. There's no real issue there. I think that it's going to be his language, what he's talking about in terms of the future, what he's talking about in terms of December, how many times he uses that nasty word that he used last time. And I think it's going to be, I'm very similarly mimicking what Jeff just said, because I believe it's going to be the tone people are going to be listening to, whether he's going to be saying, hey, things we're doing are working. One thing I don't completely agree with what Jeff is saying is, in terms of what we just were talking about, is the fact that in terms of whether it's working or not. The truth of the matter is we don't know if it's working, and we won't know if it's working because it's very lagging. And that's one of the problems that we're all facing right now. It may be working, it could be working, but we're really not going to find out for the next maybe 3 months, 2 to 3 months. So yes, it's kind of hard for him to say whether it is or not. But we just don't know if it's working. I think that may be a more accurate statement of what's really happening. We just don't know.
Isn't that scarier?
Yeah. Oh, absolutely.
You're saying that you can't.
I'm not saying that.
Oh, let's give this patient more and more drugs. It might work out. I can't tell if it's working. But here, take another one. Have another pill.
No.
Does that make sense?
As I said, I agree with what you're saying. I'm just saying that we just don't. Yeah. Your conclusion is our conclusion is exactly the same. My whole thing is we just don't know if it's working or not, and it would be kind of wise for them to. It's scarier because, see, I personally think what can really help the market is him saying, "Look, people, we really won't know for the next several months. The best thing we could do is stay on this course, and when December comes, we'll reevaluate where we stand, and maybe we'll take a pause, or maybe we'll really, I think hope, things like that, giving that kind of encouragement can spark a little bit of a rally. But honestly, there's very little he can say and do right now that would cause the market to go up in the short term, in my opinion. I don't think we're that far from the low. I think we're actually, I'm seeing more of a choppy market for the next 9 months to a year. I'm not seeing that much more downside. I'm seeing kind of what we've seen since May. But I think there's very little right now, very little that they can do because of what they set in motion and the destruction that they've done that can turn around. This is not a, this is not a a little bee. This is a huge elephant. And when you have an elephant or a bus, it takes time for things to change. And just like it took a little, while to get us here, it's the same thing is happening on the way out, and they're making the exact same mistake. They're not learning from their mistake. They're having some really smart economists, giving them very good advice, but they're not listening to any of it. So it's very frustrating. But also, one last thing, Laura, the earnings estimates have finally started coming down, and even analysts are saying, okay, we're not looking that peachy till the end of 2023. Earnings estimates and real earnings and stock prices, not over a 2-week period, but over time, are extremely correlated. Okay, there's a reason why Apple's the biggest company in the world. Okay, so the point here is usually the market, and I'd love to hear what Garrett and Jeff say, but usually the market tends to assimilate things about 6 months in advance, give or take. That's been my experience. Large caps, things like that. So I'm thinking that we may start heading higher summer of 2023, but till then we're going to have a lot of gyrations and a lot of this mishigas and this craziness, that I'm seeing. Just a lot of nonsense. That's my point of view.
What do you think, Jeff?
I think you give them far too much credit. I think that they're at best case incompetent and worst case nefarious. I do. The only thing they've been consistently good at is effing things up, being stubborn. I don't know if this is working. Listen, inflation is transitory, guys. I don't know. I think it's going to go away. It doesn't go away. I think 5% CPI is going to be the top. It goes to 9%. Oh, we're seeing incremental positive things. Now it's at 8%. Americans know. We know what's happening. We know that rents don't come down. You think you're going to get a 1-bedroom apartment off Biscayne Boulevard in downtown Miami for $1,500 when it went to $4,000? You think that's going to happen again? You think they're going to be able to roll that back? You think somebody's going to take a job at Mickey D's making $7 an hour again? So a lot of these things are sticky. They're sticky. But the problem is we, as Garrett said, have this zombie economy of stocks that have companies that have no business actually being companies anymore. A lot of them shouldn't even be publicly listed. It would behoove them to take a lot of these companies private, because the price discovery that's going to happen when you have actual interest rates at the market level of what they should be at based on the actual risks will put a lot of these people out. So there's still a tremendous amount of risk. I think we're not going to make new lows anytime soon, but we're going to keep going lower. I think these are bear market rallies. I think these are bear market rallies that if you're too long on your long-term investments, you should lighten up into. I think if you chase stocks that have ripped 25%, hoping that the Fed's going to deliver you and save you like some sort of Southern Baptist minister, you're doing it wrong. You're doing it wrong. You got to play these waves. You got to buy complete crashes, sell the rips, lighten them up or short into them. But don't sit here and wait for Jay Powell to save your life, because he ain't about that. Not in 2022.
Let's talk about December really quick. Do we think any rate decision in December is going to kind of set the stage for the Santa rally? I mean, are we going to have a Santa rally? You're shaking your head, Roger.
I have some pretty strong opinions on that. Usually, based on my statistics, and I've tracked Santa rallies, they're not so much. Well, obviously they are from, if you look at wide enough, they're obviously Fed has a lot to do with it. But usually Santa rallies are caused because retail stocks are the last to report, and retail rally, and retail stocks, GDP is 2/3 retail. So when the earnings are on the last leg of those stocks are extremely positive and better than expected, that's usually been the cause of those rallies, not really the Fed. Now, with that said, can the Fed have something to do with it? Can they be a wet blanket? Absolutely. Will they probably be a wet blanket? Absolutely. But from my experience, the biggest catalyst for those rallies tends to be retail, and I am not seeing retail surprise in any meaningful positive way at all. And we've seen already several indications from big stores like Nike's, Foot Locker. It's escaping me, but tons of retailers have given us less than positive highlights of what's to come. So I don't think that's going to happen.
Would you agree, Garrett? What are you saying?
Well, the first thing is that it doesn't matter to me if there's a Santa Claus rally or not, largely because I'm going to react to the momentum of the market. But as far as I look at this situation, I hear people saying that we're nowhere near the bottom. We're still one standard deviation above the historical mean on the S&P 500's PE ratio. So you would have to compare that to, I don't know, maybe 2007, 2008. We just blew past the whole point with the internet bubble. We still seems like we've got some contraction coming in. Will likely come in the earnings statements. But again, the one thing that I think is critical about this environment, just to package these two things together. There's only three ways that you can bring inflation down. One is aggregate demand crushing by the Fed. Two is fiscal policy. And the third is supply side. We don't have a supply side solution on any of this stuff. We have a diesel crisis. That we have 25 days of diesel right now in the U.S. economy. We have a Mississippi River that's dried up. We have policy that is effectively moving to ban offshore drilling. I mean, it's in the Interior report that just came out. So again, the Fed is going to have to address this. It's going to do everything that it possibly can. And then the Fed, if it does start to cut rates, it's just going to create inflation all over again because you can't increase aggregate demand without increasing supply. That said, looking into December, I look at some of these companies right now. I think Amazon's report was an absolute canary in the coal mine. I think that people really need to dig into that and really understand what's happening with Amazon and some of these other tech companies. Two parts to that. One, Amazon coming out, Jassy 2.5 weeks ago, the CEO starts cutting everything under the sun. We need to do exactly what Apple did back in 2016. And then on the other side, Meta does absolutely the opposite. Meta burns $8.5 billion in free cash flow in a year. And people are saying, well, how did that happen? Well, it happened because all of the dual class structures are coming home to roost now. This was something that was happening in 2006 when the banks started making it possible that Google founders could hold on to their power. It accelerated under Zuckerberg in 2020. We've gone now to 46 new tech IPOs. 46% of new tech IPOs are giving the CEOs all of these voting rights, which makes it impossible for anybody to affect change. You've got tons of tech companies that are still burning through cash. No one can sit them down. No one can tell them, hey, you know what? Maybe you shouldn't do this. And you may see a shareholder protest in some of these companies. Groups like CalPERS want nothing to do with some of these tech companies, but they have to hold them because they're within index funds. They're funding what they don't want to fund. So I look at this and I say there's still earnings depression that's still coming. And there's also still plenty of valuation compression that is coming to this market. And as interest rates rise, debt has to be rolled over. You get to 4%, now you get to 5%. I don't think any of this matters. I don't think the election matters. I don't think the Santa Claus rally matters. I know we want to look at history and try to make comparisons. 2020 is very unique to any historical event in this market. 2008, 2002, 74, 78, 87. It has so many different variables we've never seen before all coming together and trying to look to the past for a clue of what might happen in six to 8 weeks. I don't think does anybody any favors.
What do you think, Jeff? I think the midterms will impact the markets. I mean, certainly the difference between
Let's give context, right? So
Yes.
You tell me, what's your favorite stock? That's the lamest question of all time. It's like, what's your favorite ice cream? Do you like strawberry or do you like pistachio? Who the heck cares? I don't care what kind of ice cream you like. I'm sorry. I know the people at home don't either. So does the midterm election matter? It matters because it's happening in 6 trading days. It matters a whole lot for November. I'm going to show you some stuff. Does it matter in April of 2023? Probably not. But so I'll agree with that. But I don't look at this market right now as something that you can have. I'll agree full-heartedly with Garrett as something you can have a lot of confidence about 90 days out, 120 days. It's such a complex, it's like a hurricane. People are giving DeSantis shit because he's like, oh, you didn't tell those people to get out of Naples. Well, they thought it was going to Tampa, the best meteorologists on the planet, the night before it happened. That's how complicated weather is. The stock market's even more complicated. So when people are telling me 6 months from now, it's going to look like this or it's going to look like that, I don't know. But I know next week there's going to be a lot of movement. And I do have statistical, historical data that I want to share with you guys when we're done talking about this to show the kind of moves you can get in 1 month when an election happens, because that's all I'm here for. I'm renting stocks. I'm not marrying them. As my boy Lance likes to say, I'm dating these stocks. I'm not marrying them.
What do you guys think? Would you agree? Do you think the red wave isn't inevitable? My curiosity is it definitely, if we don't have a red wave and we have a split Congress, then what? Like, what are the scenarios that we can experience here?
Well,
a lot of arguing. That's
yeah,
pretty much all I got.
A lot of nonsense. A lot of nonsense.
Stagnation.
Yeah, I think the red wave is going to come. I think I personally, and I don't want to get too political here, but I think they could have made it easier for themselves by dealing with the abortion issue later on, just maybe 6 months later. But again, that's just timing.
Mm-hmm.
But I think I think it's going to help things. It may start shifting things slowly, but as I said earlier, the damage that the Fed has done and all of these things, the world is, as Garrett has painfully reminded us of, all of these things the world is dealing with. I think that's going to overcome the elections and earnings and possibly a lot of other things that individual stocks are doing, because there's just simply so much that's been thrown. The stress of the market is just too much for this to really make a significant change.
To agree with this, look, I think the only way that it could economically be more of a challenge is if Democrats control both branches of Congress. And the reason that I say that is because they will spend more. They really has been the party of, that you had the Inflation Reduction Act, which doesn't reduce inflation. They're talking about passing another spending bill after the election. Again, I'm in the middle of the road on this, but it doesn't change the fact that Congress is still going to spend a lot of money. We're still running $1 trillion deficit next year. We also are increasing COLA benefits for 70 million people by 8.7%. So the government is by default creating that money that is being put into the system. And all of these things will continue. These spending bills are coming along. It is likely, despite the fact that the courts are going to fight it, they're probably going to get the student loan package done. So that's going to add $10,000 in cash to people's pockets. And let me tell you what they're not going to do: save the money. They're going to spend it. That's just human psychology. So my general expectation is that we're in this environment where the Fed is not going to be able to rely on fiscal policy to reduce it. And until hopefully maybe Congress does get in here and works out the kinks, and maybe they push to suspend the Jones Act, or maybe they push for more pipelines, or maybe they push for more reform in supply. But even that will still take anywhere from 12 to 18 months to realize the potential benefits in reducing inflation.
Mm-hmm. Jeff, back to you, buddy.
Are you ready, Laura, for what
I am ready.
Are you ready?
Tell me what you think.
Can you handle the truth? I'm going to show you. I'm going to share my screen. Let's go. All right. So let's look back at what happened when Mr. Trump won the election. These in the month that he won the election, the following day, were the best and the worst performing sectors of the S&P 500. So let's roll back the clock to November 2016. Oil and gas, no brainer, right? Mm-hmm. Drill, baby, drill. That was basically, he ran on that in the wall. Drill, baby, drill, and the wall. They're not talking drill, baby, drill so much as they are. I agree with Garrett and Roger. Like, we're not going to control inflation. We're not going to get fiscal spending out of control underway. But the reality is that the blue wave has been incredibly regulatory for a lot of sectors. They've been a wet blanket on certain stocks in certain sectors, and that the removal of that wet blanket could lead to some nice money if you just follow along with the big players. So these are the returns in the sectors mm-hmm. in under a month. That's like 3 weeks. So now let's look at some of the stocks. What they did. You had, and this is a little bit, people don't talk about these. So I'm looking at financials. Financials build war chests during Democrat-run Congress, Democrat-run executive branch, when the entire government's leaning in the same direction, particularly Democratic. Banks are scared of regulation. They're scared of lawsuits. They're scared of a Department of Justice that acts like Wall Street is evil. So banks, when you remove that wet blanket, they ripped. Look at this stock, Lincoln Financial, 35% in a few weeks, in 1 month. And so if you let's look at Goldman, which is a big household name. They're not like some weird little company. These guys went up 19% in that move. And that the bulk of the move that they made For the next 6 months, they consolidated. They went a little bit higher. It all happened in that month. So I have a system that picks up on what's going to happen when big institutions start piling in. You want to be there. Most stocks make 80% of the returns and 20% of the time. There's going to be big action happening in November. I'm riding the best ones in November. I've got new trades coming out tomorrow. I've got a program I'm going to talk to you guys about tomorrow if you want to join at 1 p.m. And then I have a couple of bonus trades I'm going to give out right after the election next Wednesday. Win, lose, or draw.
So you're doing a briefing tomorrow, right?
And education.
Very cool. It's going to be very cool and very, very timely, especially after what the Fed is going to be talking about today. So, folks, really, really take advantage of that. You want to participate. Get all of the insight that Jeff has. He's very, very good.
But I won't even be in those stocks in December. So let's just have a good November. I'm here for a good November.
Yeah.
Right.
Yeah.
Right.
I'm here for a good time, not a long time. Let's go.
Jeff stocks are very much like he has a very good timing for that month. Like he recommended Norwegian in
last month. I had 9 trades. I had 4 of them with over 100% return.
Right. So,
and I have shorts too. I had a put in Tesla last month. The most, as Garrett said, the most bullish month since my life in Dow Jones, since 1976 in the Dow Jones. Most bullish October in 46 years happened. And I had a short that printed over 100%, a put. So the system I'm going to show you is a hedge portfolio. We got 9 trades. I'm going to do 2 bonus ones because it's election time right after the midterms. But I'm going to lay it out for you what I think is going to happen with the elections and what flows I'm already starting to see at the beginning of the month. So be there, 1 o'clock tomorrow.
Yeah, we're dropping the links in here. I see some people are like, how do I join? It's free.
There you go.
Just click right there. All you do is register. It's completely free. So
you guys will
join
love
and hear what he has to say. And that's tomorrow at 1. You guys, thank you.
Don't miss out, folks. It'll be a fun time, especially after here. I want to hear what Jeff has to say after Nincompoop Powell says what he has to say.
I'm gonna go I gotta go do some more push-ups. I got like the St. Jude November push-up challenge, and I just got to blow off some of the stress before this guy brings the pain. I can't believe it. Have you ever seen, Garrett? You've been watching markets a long time. Have you ever seen anyone that wants to be having his hands so on the lever? I mean, it's unbelievable. Just get the hell out of the way.
Just get out of the way.
Let the markets price discover. We can do this.
It's crazy. What is the St. Jude push-up challenge?
Oh, it's this charity thing. You know how people like to do walks and stuff? 3,000 push-ups in a month.
Oh, really?
Your pecs must be hurting, man.
I mean, I'm going to try to sandbag it because I know doing
2,997 to go.
No, because during Turkey Day week, all the curls I'm going to be doing are 8-ounce curls and maybe a little bit of mega pours of wine and the drumsticks. But yeah, it's a good cause. It's a great charity. Helps the kids. You got to help the kids. Come on.
Got to help the kids.
It is a great charity.
Thanks, everyone.
Thank you so much for joining us today. Everybody on the line.
See you guys tomorrow. Thank you, Laura.
Thanks, guys. Sign up for Jeff's
tomorrow, buddy.
Bye, guys.
Bye-bye.
Guys.
Thanks, Garrett. Thanks, Laura.
Thank you.
Thanks, Jeff. Thanks, Francisco. Bye, guys.
Bye-bye.
Bye.
Hi, everyone. I'm going to leave the room open for a couple more seconds so everyone can sign up. I'm going to drop the link one more time. And thanks, everyone, for joining us. And we'll be back next Wednesday at 11 a.m. Thank you, Laura.
Thanks, Francisco. Peace out, everybody.